Morning. Yeah, just as usual, just wait for a couple of minutes till 1:30 and get started. Morning, morning, morning. Okay, well, let's get started. Okay, NGAS, I've got it up there because I've discussed this morning and suggestion to go for a long 6.77, so it's a whole 3 cents already up. What a pleasure. Don't forget, just check I'll just point out as before, specifications, go to specifications, and you'll see the contract size 1,000. So just remember, it's so 1.0 is $6,800. So just so you know, yeah, so that's why we sent the trade out, is because it's bounced off the 200 and it's been a bit sideways. It is a bit slow. It's not the fastest thing on the planet. So make sure you don't tie your capital up in this one. You won't be able to trade for maybe 2. But it can jump. I mean, look at these couple of candles. But normally it's fairly slow. So to prepare to be in there for a little bit if you like it. Anyway, that was the signal sent out this morning. Okay. Again, apologies for the GBP yesterday. That turned out, well, a complete disaster. Very surprising. I gave up what I thought might be a couple of reasons for it, but anyway, so I think it's grossly overbought. And yeah, so probably a little bit downside. Whether you want to join again or not, it's up to you. But yeah, this happens. So yeah. Okay, so we'll see how NGAS goes. If you, I'll put up the position size calculator for you in case you didn't see the signal or you'd like to join it. It's slightly higher the entry we had on the. Doesn't matter, it's not that far away. I've put the stop in 6.38 and 7.43. So it jumped up a bit. So you're going to have to put a slightly higher TP, make it 7.5. Don't want you tangling with the stop. There you are. Yeah, just about squeezing that. You can get a higher TP. You might even go all the way back up there. I think it's a very good chance it's going to do that. Going into the Northern Hemisphere winter. As we all know, they use it for heating. So it could go up there. So anyway, if you want to put the stop up to 7.5, etc., if you're not already entered. If you want to slightly get the risk reward above 150, put that stop, 7.6. I think it's a good chance to get to 8 personally, but it might take a bit of time getting there. Just bear that in mind. So there it is if you want it. It was $70 a micro in the signal was sent out. Now it's $80, but don't think that's going to hurt anyone too much. Don't fiddle the stop. You can always put the TP a bit higher if you want. Always, as I said, bear in mind, it might not get there. It might get further up. You can always modify the TP as well as your stop. Maybe thing is risk management, and it's nice when it's in a decent profit, then you can play around. But please, as I say every time, don't get the stop too close. You get stopped out in the noise, and then you're not on board when it actually gets to its target. Very frustrating. Give the trade a chance. Yeah, give the trade a chance. Don't take profit too quickly. Well, that's a very difficult. Window X is the most difficult thing in all trading. But don't take it too quickly. Give the trade a bit of a chance. All right. Yeah, just to say, bear in mind, we've got the slope. Okay, I hope you've all got that. I'm going to knock that off now. Okay. Right. NZD, keep putting JP on the brain, that one. NZD USD. I see downside around the 56 level. It's hovering a little bit slow. There's a CPI coming out today at 2:30 in the States, which inflationary will really strengthen the dollar big time. Not too, it might sort of be a bit even, but we mustn't be totally scared and paranoid about these fundamentals coming out, because they're always going to be coming out. But having said that, I do see a bit of downside. So that 56 was the entry. It's a little bit above that now. So if you want to join this one, I see downside. If you want to, I'll put the calculator up. If you don't, well, I won't. It's up to you. Okay, so anybody want to look at the calculator on this one? While you're thinking about the answer, I just want to remark that there's a lot of indecision out there in the markets at the moment. And that's why sometimes when that happens, you get a little bit of toing and froing, not a lot of follow through, bit indecision. That sometimes happens. So you're going to get fantastic days and you're going to get not so fantastic days, and sometimes you are going to get, let's be honest, boring days. A bit like life. Okay, I've got a 5680 down here, so I'll stick to that one. And the TP, I've got it, where is it? 5450. Yeah. I like the look of that one. Every time the dollar comes off, which it is profit taking. Remember the DXY, as I mentioned, is a tradable, we don't have it on here, is a tradable instrument. Through a bit of profit taking, it seems to have the bias to come back in again. So it's a bit sideways, maybe a little bit wait for CPI figures, but the overall dollar strength is still in action. I've mentioned, I'm sort of repeat myself a lot, but inflation is still not under control, and they've got to get it under control. So I cannot see at this stage any change in what we call the hawkish outlook in the US Federal Reserve. In other words, a stick to ongoing interest rates being increased, and use a safe haven. I see the dollar still making strength. Okay. So just hesitation there, let people in. Okay, yeah, so there it is. If you want to join it, there it is. I've already got it written down, so I think some guys got into it yesterday. So if you didn't, here's your chance. If you already have, please don't double up, just hold. Okay. Right. Okay, I'll knock that off. Just going to go through a couple of things. The NASDAQ still seems to be coming off. Remember we mentioned sell the rally. Anyone, it's not on here, but I think it's Nazir went for a short. It'll be smiling. I think probably the same in the S&P. Just quickly check it around about the 3.6 mark. Yeah, not shooting the lights out, but it's in profit. That's the main thing. Okay, we had an AUD JP, and that was a bit of good news. That did very well. 91.50. It's now 60 odd pips in profit. Again, modify the stop. We don't want you to lose on that trade now. It's well. So if you did join it, yeah, modify your stop maybe to 91.70, maybe 91.80. Yeah, make it 91.80. Then you got a profit involved. Whatever happens, let it run. But I'm not that confident you should be joining it now. I think that ship has sailed. Bit of indecision already today. Tried to go up, sellers came in. Tried to come off. Buyers came in, bit of indecision. So let it run, modify your stop, but don't enter. Okay. At least that's a bit of good news after GBP debacle of yesterday. Having said that, we can have a quick look at it. Having said that, so a quick look at it. GBP. CAD, it's trying to come off. My worry, it's still above the 50, but I can't see it staying there. The 10-day moving average seems to be holding. I think it's a very good chance it's going to break down here. You might say, well, I've lost yesterday. I don't want to go and join it again. But if you do, I see downside on this one. And the same with the GBP CHF. He's seriously overcooked, and I see some downside. So anyone want to look at those trades again, they can do. If you want bitten twice shy, obviously then I won't put it up. Okay, that's about, we'll come back to that. You can ask or put the chat line what you want to do as per normal. In the meantime, while you're doing that, I'm just going to check gold. Gold, remember, I want to short at 1680, and my own fault. I chickened out a little bit at 1680. I thought, we'll wait a little bit. Unfortunately, I missed that trade. I don't want to be short 70. So yesterday it went to 1674. I thought we might get a chance, but it didn't hold and came off. So I wouldn't be chasing it now. But if you're in, I shouldn't be in, but if you are in, hold on. If you're short, if you're long, I'd be questioning that particular position. But yeah, I'm not at this stage tempted till I get a better price. Okay. Okay, fair enough. You want to break the 50-day moving average, I presume. Okay. Yeah, that makes sense. Yeah. Okay, good. Brent, I see downside there. It's broken through. It's now in the sell zone. I have to say, it took a bit of time getting there. What a relief, and it seems to be happening. Okay, so the 10-day at the moment is holding. I think it's trying to attack 92 again. I personally think it's a lot of that's more profit taking, short covering bounce rather than any specific, any movement, strong move upwards. All that thing with the Saudi production, lack of increase, but slight reduction. I think it's all been discounted in the market. I think it's overcooked, the Brent, and technically speaking, it's in the sell zone. So if anyone wants to join it now, if you've got it, obviously don't go in again. But if you're not in, it might be an idea to look at this as a short. Anybody want to look at this as a short? 92 level and put the stop up maybe 96, something like that, and take it down. Anyone like to look at this for a short? Right, what do you think about that? I just want to mention, guys, remember this is a trading room. I specifically try and find trades, hopefully good ones, sometimes not. It's no 100%. But I do clarify. I often use DXY, yields on 10-year notes, economic calendars, 200-day, 50-day moving averages, position size calculators, specifications, see the margin. Those things I can answer any questions of, clarify, leverage, etc. No problem at all. But I'm not going to be doing what's called training. That's for the classes. Just bear that in mind. Okay, finally, just hold fire. Just bear that in mind. So anybody there says, I'm not sure, can you please ask? I will do that, no problem at all. It's the practical areas, clarifying, etc. Or some you went through the class, not sure about, but it's not a training. If you're completely brand new, you're going to have to go to the classes. If you haven't bought any knowledge package, SMC or anything else, and you want to come straight in here, I think it might be a little bit above your head. You've got to get those basics, and you have to understand how the platform works. Okay. You don't know how to enter, modify, and you don't know how to catch a position. You don't have to close the entire position unless you've got 0.01. There's nothing smaller than that. But if you've got bigger than that, you can not totally close, you can partially close. How to do that. Okay, I'm going to go for 83 if you want to do it. Didn't have any feedback if they wanted to do it, so I'll do that if you like. I'm going to put 96 up here. Put 83 down there. $70 a micro. I'm going to mute information getting from there. Sorry, I think you're wrong on that one. Just joking. Okay, right. So $70 a micro. No, it's just me trying to retain my youth. Anyway, I'll mute you all. You can always remind me to unmute if you want. Okay, right. I haven't got many trade ideas at the moment. It's not because of CPI, it just seems to be a bit quiet coming over from yesterday. We did look at the EUR CAD. Nash is not here, probably just as well, didn't go too well. I must admit, I thought it wasn't too bad. We had Nash had an idea of a short, I thought it wasn't too bad, to be fair. It's 133.40. And it's not doing too well. 1.3340, it obviously is 1.34. So unfortunately, that's not too good. The stop loss hasn't been triggered, I don't think. But yeah, a bit disappointing. If you're in hoping you get knocked out, I'm not sure I'll be enjoying it now. Too much indecision on those candles. Look at those wicks, too much indecision. CHF JPY will give me some serious jip. This one, to be fair, is not looking good at all. I don't know what's doing up there. Oh, no, so I think the GBP CHF, sorry, CHF JPY. Yeah, I like it. I'm not sure I'll be joining. I still see 148 as a possibility. Guys might have taken profit already, or they might still be in. If you take profit, fair enough. If you're still in, fair enough and hold. You put your stop into profitable territory. You got a 145.50 or around about that level a couple of days ago. You're in profit anyway, let it run. Joining it now, I'm not so sure about that, Mike. I'm not sure about that. I wouldn't be selling, that's for sure. Remember, JPY overall, I see stability in its weakness, as I mentioned yesterday, due to its enormous debt problem. They are battling to increase interest rates. So as a result of it, I don't see a lot of strength in the yen. And remember, they're going to export the way out of trouble. They want a weak yen anyway. to make it more competitive. So yeah, upside the name of the game. Joining it now, I'm not too sure about that. Yeah, so at the moment, I would say leave that one alone. Okay. Any questions? Say so. That's my view. Remember, always it's my view. The dollar yen. Said it many times. I've had it a few times. Sometimes I miss it, and I think I'm going to miss it again. I'm just not keen to join it here. I want to buy it, but I want to buy it quite a bit lower down, near the 145 mark. If it doesn't come off, which it looks like it's not going to, so be it. But I'm not comfortable chase it here. Although having said openly that I think 150 is on the cards, you're going to have a massive stop, maybe about a 144 stop. You're not going to risk reward, and you're going to have a pretty big stop to overcome maybe the pullback from yesterday. So if it pulls back, great. If it doesn't, I think you're going to wish them well on their trip on the ship, because that ship sailed. Okay. Okay, that's my take on it, Mike. Any questions on that? Just post. I'm going to move on to AUDJPY. Do you want to join it now? I still see upside. I still see hold if you're in, modify. But joining it now, thanks, Sir Mike. But joining it now, not. Look at those wicks. It's defending today and yesterday. I'll be a bit nervous to join it now. In fact, I'd be very nervous to join it now. But that's my opinion. Zeph, what do you reckon? Morning, Galaxy. Is it Karen? Not sure. Yeah. That's just my opinion. Anyone want to join it now? Okay. Right. Anything else to talk about? We looked at the NAS very quickly, albeit. We have a quick look again, just to get an indication. Yeah, still the rally is still very much the operation. Don't join it now. If you did join it, well, I would suggest you hold. Maybe reduce your stop a little bit. Very, very volatile. Not for the faint-hearted. I don't suggest you do this as a beginner. If you've started your trading journey recently, rather graduate to that. It could be too much for you to handle at the moment. Incredibly volatile instrument. And anybody knows it upper street, it's enough jump around. So yeah, that's why I see how the MGAS does. I quite like that, because that's not, in fact, the opposite of the NASDAQ, because it's pretty stable, fairly quiet, doesn't jump around quite to the same extent. Okay. By coincidence, they're called Brave, just joining now, I've noticed. Just talk about Brave. Not the person, but I mean the Brave who trade in NASDAQ. Okay. Okay. GBP can't play with me. Just seemed to about to come off. As Zeph said, maybe wait for a break below there to join it. But I just personally don't see it sustained these levels. I do like the Canadian, I mentioned many times, and the pound is very overcooked. I think some recent strengths come in because the figures came out so bad yesterday. It had the opposite effect. I think it's put a pressure, more interest rate increase. the budget that caused so much furore, looking down long term, might actually work out a little bit better than expected. Maybe that gave a bit of a kick to the pound. Having said that, as mentioned many times, a bit of a maverick. The pound's a bit of a strange currency to do stuff that doesn't always make a lot of sense. Look at those wicks, look at those candles over the last couple of weeks. I mean, talk about that, and it's ridiculous. So, yeah, but that being as it is, I think there's going to be some downside here. Yeah. Yeah. That's what they call quantitative, buying up gilts or securities to release cash into the market. Yeah, they're a bit of a hole at the moment, quite frankly. Yeah, like a lot of places, to be honest. But the thing is, they're not used to it. They're used to have all their sort of free this, free that, free the other. Now they're battling a bit. Euro USD for a short, getting an entry. Totally agree with the short, getting an entry. Look at those candles on the daily. That's my worry. Totally agree with you. Look at that. Just look at what do you now? Thursday, when Tuesday's candle bounced up, bounced down. Total doji, total indecision yesterday. And look at today. All right, it's only 9-10 hours old today, but still total indecision. I think there's a lot of fear out there. It's a bit overcooked, being, euros less than $1 now. So, I see the short that could have a bit of a bounce before we get there. I'm a bit reluctant to play too fast and loose for euro at the moment, to be honest. That's my opinion, but to say, you guys think maybe you can try one, but look at those candles. That's not giving me confidence. That's what I think. The candles are telling you that. The buyers themselves are telling you exactly that. That's why I look at the candle. What's that candle telling me? Indecision, not bloody sure. If they're not sure, I'm not sure I'm sure either. I don't think potentially anything, to be honest. BOIPZ. Not sure what that name is. I'll call you Mr. B. Not Mr. T, but Mr. B. I don't think anything you can read, anything between the lines, fundamentally, double bottoms, triple tops, whatever. I just think that's indecision. I think out there psychologically to start to say, well, we're in a bit of a mess in the euro, but that's a little bit overcooked. So also CPI, don't forget, is coming out later on. Monthly, yearly, and quarterly is coming out 2:30. So I think it's going to be a pretty sideways for that in the meantime. Remember, the euro dollar is by far the most traded instrument in the world. This one instrument at daily liquidity of trades dwarfs the world stock markets, to give an idea of the size of it. On DXY, it makes, I can't remember, I should know, I've forgotten. It's about 55 or something percent, or just over that, of the six currencies in the DXY. Euro makes about 50-55% of it. So it's a very, very, very big, very powerful pair, and as a result of it, extraordinarily liquid as a result of it, I think of it indecision. I would stay clear for the moment. Beyonce can go either way. It's based off flick of a coin. Yeah. The trend is your friend until it bends. Yeah, we just looked at, Cheryl, we looked at NGAS. She got in the mailbox anyway, sent out this morning, and NZD USD for a short. Okay, so yeah. So the NGAS, well, it's clear in the mailbox. NZD JPY, unless somebody wants to look at something else, I'll quickly have a check on that one again. Oh my goodness, what's happening here? Lucky with NZD JPY, I've got that on the sodding break. Sorry about that, Farney. You did that yesterday at the beginning of the day. At the end, I've got the NZD JPY on a sodding brain. They've been looking for an entry. Anyway, panicked then when I saw 34. What's going on? So I realized the wrong one. Okay, yeah, we've got a short on that, around about the 56 level, popped up a little bit. I think it's a bit sideways. It's cleared the short zone. I see dollar strength. It's a big decision, not the quickest, but yeah. Yeah. But those are the ones we got out. If you want the figures on the NZD USD, we got 56.80 as the top and 54.50 as the TP, which makes it, if you go in now, it's about what, $7? What's $7? About 110 rand, 115 rand a micro. Good, good. Okay. And gas is slow, by the way. I mentioned that before. So don't expect too many fireworks, but yeah, as long as it goes steadily in your direction. Okay. Yeah, I'm going to be honest, the strategy room this morning, I was a bit limited in the ideas I came up with. It's the same, you probably hear from the body language. It seems to be fairly quiet, not just the fundamentals. I mean, quite a sort of big moves over the last week or so. I think it's a bit sort of dust settling, quiet time at the moment. So we spent some time clarification or answering some questions or stuff on that basics, if you like, unless you can see something. But again, I do see downside. In fact, would I go in now? Normally, I'm actually, yeah, I do see downside even now. What is my worry is I'm looking at that candle there. I'm just going to zoom in a bit. Look at the daily there. It's gone down, but then the buyers came back in again. It's too much indecision there. But John, I agree. I see the short, but it's just not happening at the moment. So I just, yeah, unfortunately, it's my life, you know, exciting days and sometimes boring days. And I think it's going to be, unfortunately, fairly boring today. That's one of the frustrations. That's why it's nice to have a trading room or a forum or something like that, because on the boring day, especially full time, well, it's boring, like I say. Especially if you just had a couple of days extreme adrenaline flow. And then it's like getting off the highway when you're used to doing about 180 and suddenly getting on 80, you think you've come to a standstill. And this is the difficulty. I've learned the hard way. When you start forcing trades that don't exist. That's part of it, yeah. The CPI is important because it points to inflation or lack of. It's not, you're quite right, Zeph, just not getting momentum. The CPI figures are important, but they're taking a little bit more importance lately. It's because this extreme worry in the Fed re-inflation, and it'll be seen basically about interest rates again if it's higher than expected. So yeah, so you're probably a bit quiet time to that comes out. Hate it like that. It's boring. Look at the paint, still not drying. That's correct, yeah. Have you done that? Come off the highway. I know you should be doing 180, but you are. And suddenly you slow down to 80 or 90. You think the car's come to a standstill. Everything's rather do. Yeah, well, year on year, and you have a monthly CPI, and the core CPI and the overall CPI is the core CPI has got some what you call it, some products. Sorry, the CPI itself has got some products incorporated in those figures that the core CPI does not, basically. To be honest, I'm not sure which ones they are. It's like you have, to give an example, I mean by that, if you have a non-farm payrolls, it means the jobs report excluding agriculture. Okay, so yeah, so you'd have a core CPI which encompasses a certain amount of products to give an idea of the inflation increase or lack of increase in the prices,
The CPI without the core will be incorporating more products. So you're going to ask me which one does that include? To be honest, I didn't know, I've forgotten. But overall, it's a similar trend, you know. But you'd have a monthly, year on year, and you have the quarterly. And it can be different, obviously. Yeah, well, if you go and you ask what's the likelihood if it's higher to be weaker or stronger on the dollar, and it'll give you what normally happens. In this case, it's slightly different because it's now all about inflation and interest rates. So sometimes good news could be bad news from a point of view because it's more jobs, etc., more people get employed. In theory, it's good news, but then they'd be spending more because they're earning more, they're going to spend more. And usually people, they spend more means they increase their debt. You know, you just got to, you were on 50 grand a month, now you got a salary up to 75 grand a month. What happens now? You just increase your debt, start buying more on tip. Unfortunately, we are. So that is inflationary. So that would be considered the other way around. So again, rather wait till the figures come out to see how they're interpreted. So normally it's fairly cut and dry, but at the moment it isn't. Major uncertainties in the world because, like I mentioned yesterday, the world debt is around about 300 trillion. The world GDP is 100 trillion. So the debt is a major problem. It's been started about 50, 60 years ago. I think the credit card and borrowing, etc., taking off the gold standard and the currency, the dollar mainly. And as a result, people can now have the goods now and pay for it later. So it's been a sort of a open sesame for debt. So the step now that we basically live on it. That's why if you get ITC or you can't get credit, you're snookered now. Well, that didn't exist in the past, so you couldn't afford, you didn't buy it. Now, if you can't survive without credit, then it's become an issue. It's been kicked down the road, and the guys now picking up the problem. Japan, Europe, America, etc. And that's why America is so powerful. It's an extreme worry. I mean, they've got a government in that's very left now. It's spending like mad, but it's not their money they're spending. It's run out of taxpayers' money. They don't tax so much. So they're printing more money. They're borrowing more money. And that's fine if they can continue pay it. But if you can't pay the loan anymore, the bank comes in and withdraws, and then you've got a problem. And that's the major fear in the States, to a certain extent, Europe. I mean, I have guys out there who've got degrees, good jobs, electrical engineers, lawyers, or whatever. I'd like to see your balance sheet. You probably find you owe more than you actually have in assets. In fact, I think if you next time you go in Johannesburg, come outside there, guy standing in traffic light and sell you something, he's probably richer than most of the people on the planet because he doesn't have debt. The guy driving a fancy car, it's not his, it's debt. And that's the major problem. Okay. Unfortunately, being human and emotional and just come to sales pitches, we tend to leverage liabilities, not assets. Yeah. To be honest, there's enormous amount of guesswork going on. I've listened to some of these Bloombergs and etc. Even Business Day or whatever. And the bottom line is there's a worry, but they can't tell. And especially in South Africa as well, there's a major worry here. Transnet wants to go on strike. Well, we're going to go figure. You know, that the thing's basically a complete mess. No one go on strike. Sorry, I can't afford to pay you any money there, Anya. So in that case, I'm going to strike for more money. Hey, motion. Simplistic put them, it's no big deal. Most of these things are, most it's common sense. You've got to have a living wage, well, clearly, but at the same time, the reason why you can't, because the place was run to the ground by the other scarpered somewhere to wherever they've gone with the money. Yeah. Okay, Isabel, the Dow. Right, well, yes, I have a big fat tip for you on that one. Don't touch it till you get the figures. It can go either way, like I mentioned.
Um, bottom line, if the CPI is higher than expected, clearly that's going to be inflationary. Clearly, it's going to be high on yields and high on the dollar strength, which will end up as a negative on the Dow. If the CPI is lower, now the inflation is lower than expected, we could get a bounce upward on the Dow. I cannot even begin to give anything other than a 50-50 what will happen. So if you feel like a gamble, maybe instead of putting on the Dow, maybe go to Monte Casino, I presume you live in Joburg, and sit there on the roulette table. Bit more fun. Sorry, it's a complete gamble what will happen. So my tip is this, leave it alone. I would like some support as well. How do you mean, Anya? Oh, I see what you mean. Okay, yeah. Yeah. Well, as a matter of fact, high CPI will be a bearish. Look at this indecision there. Look at this indecision. That's good, a shorter term chart. See, look at that. That is for the short term scalpers. The costs are too high. The retail costs and the spread's too high for you. Just got a question on the WhatsApp. I've got my WhatsApp on the computer on the other screen. Ask about learning material. I just want to clarify to those who don't know, there's 3 companies involved. There's the MetaTrader 5 platform, an international platform used by many brokers. There's Quick Trade, which is the broker. And then you've got Stock Market College, which is the educational package, all separate. I work for QT, not SMC. So any inquiries about packages or anything like that, you go to SMC, the live chat, you've got academic support or whatever, or general, they'll assist you. Okay. Okay, right. Down, that's probably the same. 92 seems to be holding. Anything happening on the end gas? That's going to be jumping around too much yet. Please quiet. NZDJPY, NZDUSD, hovering a bit slow, but we'll see. Okay. Obviously, we've got a trade idea out, so for our own selfish want, the CPI is going to be high. For international purposes, I'm not sure that's going to be such a good thing. One thing I do like about shorting Brent is if your trade comes right, it's good for everyone. If you're going long Brent, you want the trade come right, but it's not good for the poor guys filling up with petrol. Oh, talking about that, I think we must have an increase soon. Because look at this exchange rate. Remember, it's paid for in dollars, oil. Look at that, 18.36. And it eventually comes up. 18.36 to the dollar. So yeah, even if Brent comes off a bit, with these exchange rate being so hectic, I still see a bit of an increase. I think they're terrified to come up with a figure 30 around a litre. It's going to not cripple, but it's going to have a serious knock-on effect on the economy. But look at that. Cheryl, I don't believe it. You just made my day. You're on the GBP CAD. See what she said there? I have to blink. I've had to wipe my glasses. Am I seeing it right? You're in profits. Hallelujah. Brilliant. Yeah. Well, it's hovering. Look at the 15-minute chart. Coming off a bit. I do see downside, to be honest. So I presume, unless you longed it, then good for you. You did very well. But unfortunately, the short I came up with, well, been many times mentioned was a serious pear-shaped job. But yeah, I'd be able to see downside here. If you're long, I'd be a little bit nervous. If you're short and you're in profit, brilliant. Hang on in there. Oh, great. Move the DJ barrier. Yeah. Well, that's right. Yeah, it was the other day. The CPI came out and had a massive effect on the dollar because it's so inflationary. Remember, if the yields, the dollar as well, but the yields on the 10-year note go up, that's inflationary, right? That'll have a negative effect on the markets. When I say markets, I'm excluding forex. If you understand golf, it's like forex, like a match play. It's just between the two individuals on fighting it out. So you know, if you think pound is weak, then you sell it. If you're strong, you buy it against the other currency or whatever. It's just slightly different. But when I say markets, I mean the stock or share market. Yeah, I'd say we got burnt badly, but that's the downside here. Okay, guys. Sorry, just to mention again, I expect it's going to be fairly quiet going up to 2:30. So the 4 o'clock show later on today should be a little bit more action-packed. Yeah, I'll leave the stop for the moment. Yeah, that's fine for the TP. The stop, no, leave it there. A little bit tight, maybe. Where's that? Sort of daily chart. 5357. Maybe a short-term chart. No, it's above the 4-hour times 50. It should be all right there. If it can break the 153 level, maybe get down to 152.80, then you can maybe move your stop down to entry, and then you'll be risk-free, if you like. Okay, sir. Thanks for joining anyway. Never mind, sir, so I can do it. Untitled Chapter. Thank you for joining us. Hope to get you later. Good stuff. Thank you, Cheryl. And thanks for your contributions. Very much appreciated. Okay, right. So, yeah, anyone want to look at anything? Don't have any particular US shares I've got in mind at the moment. I think can't really see much unless you can spot something out there. To join, the US dollar yen is still, I want to join, it's too high. Yeah, look at that indecision. Look at that 4-hour. Look at that. No, leave it. So yeah, I think we're going to battle to find any more trades on this. Hold on to the ones you got. Keep an eye on them as per normal. If you can find any more, what a pleasure. Otherwise, if you like, you can start asking some questions or something in that line, because as I say, apart from clarification, which I can certainly help with, any US, yeah, this is it. I don't have any at the moment at all. If you can think of one, Curtis, go for it. We'll have a look at it. I don't see a trade. Remember, it doesn't open to 3 anyway, but that doesn't matter. We've still got planning beforehand. I have a look, but I haven't got one at the moment. Either the ship has sailed, we get a better entry. I'm still very much the bearish side. Sell the rally has been the way forward. I'm sticking with that. Oh, yeah. Okay, Jacob. Yeah. Gold likes a weak dollar, and it likes a weak yield. So if the CPI is inflationary, all focus will be going into Fed interest rate hikes, which basically means stronger dollar.
And the result of that means inflation means the yield should go up, so it'll have a negative effect on gold. If the CPI coming out is not just better, but a lot better than expected, in other words, inflation a lot less than expected, then you should get a jump in the markets and you should get a decrease in the yields, and more to the point, get a decrease in the dollar, because I think maybe slow down interest rate hikes, and then you'll get a jump on gold. So yeah, to go in before that is pure unadulterated guesswork. We don't know. For fun, we can say what I think, but that's not advice. It's just a guesstimate. We used to do that in non-farm payrolls when we were in the office before COVID. We used to have fun bets, do you think it's going to be better or worse? But it's just a pure guesswork. We don't know. Yeah, shot me completely, Cheryl. Yeah. Well, you get it wrong, but really surprised me that. Yeah. The only thing I say I put it down to is the fact that it looks so bad. I think there must be a pressure on the Bank of England to increase interest rates. Of that expectation, the buyer jumped in on the gold. The big boys did. The institutional guys did. The gold, sorry, the GBP. So yeah, that's the only thing I can think of. And it wasn't even against the dollar, it was against strong currencies like the Swissy and the Canadian. That was a massive surprise, yeah. But bearing in mind, pound does funny things. It's the one currency I'm a little bit wary of. It has a bit of a life of its own. Always reminds me, if you follow rugby, a bit like French rugby. One day it comes out and they'll thrash New Zealand, and another week will come out and be thrashed by Romania or Italy or something. It's a funny currency. Okay, I just wanted, I do it at time just to make sure, because I think some guys don't have it, but I'm just going to just copy and paste in the quiet moment the three links I think you should all have saved. Obviously, all you've got to ignore it, but just going to take a few moments to help those who don't have it. This one, first of all, is the economic calendar. Please copy, paste, save to refer to. Very important. The DXY, remember the DXY is made up of 6 currencies, predominant by far is the euro. But it's made up of the majors, plus the major means the yen, the pound, obviously, and the Swiss franc. Those are the majors. And then, of course, the Canadian, and surprisingly, the the Swedish krona. That's the DXY I mentioned. And this is the 10-year bond note, whatever you like to call it. The longer term, like 15, 30 years, often bonds. It's all about lending money, basically, or borrowing money. And you have the 3, 5, 7, was it? No, it's the 5, 7, and 10-year notes, like a bond terminology. This one is by far the most watched for inflationary figures worldwide. And the most traded instrument. They trade the bond, the yields go in the opposite direction. Okay, right. So if you haven't got those, well, now you have. And I personally think it's far more important to have those than half a dozen other things one learns, which are minor in comparison. Gives you the overall macroeconomic picture. Okay, right, so to say, anything you'd like to discuss, anything you're not sure of? I'm here to help in the meantime, because I'm not sure we're going to get any major trade ideas, but if we do, it's not going to be taken off till later on today. You've all got the calculator, very important, don't use it for the share market. Remember that, that's completely different. Some guys are going with 0.01 on a share because they're used to Forex. That won't cut it, it's a different setup. Okay, Sharon, thank you for joining us. Okay. Everyone knows what leverage, how it works. Anybody not understand leverage? We talk about margins, leverage, margin calls, free margin. Does anybody not know that? I can spend a couple of moments explaining that if anybody there doesn't understand it, because it's clearly very important you do. Okay. We call this derivatives because the margin or deposit you put into the market is the amount is derived from the underlying instrument. So, right. So when you go in, you get a contract size exposure and you put in the margin to your deposit. You have to have free margin in the account because the markets go up and down. Mark in here. If you don't have enough margin, you will be margin called, which basically means you don't need free margin. The biggest position you have open will automatically close. Nothing to do with the stop loss. So if you got, let's say, 1,000 Rand in your account, you need to have at least 300 or 400 Rand in, maybe 300, 250, something like that, in your account as free margin to make up for the ups and downs. If you put 950 on the market, you've only got 50 free margin. If during that time, the ups and downs, we call the noise, moves against you, you might go back the other way, but now you've got run out of free margin, you'll get margin called, and therefore your position will be closed. So you watch the margin level, 80% is the critical figure. If it drops to 80% or below, the biggest open position or trade you have will be automatically closed. They'll choose that for you, it'll be the biggest. That's the one you might not want to. So I suggest you keep your margin levels above 100%. Okay. How do you work out what the deposit or margin is, or sorry, what the leverage is? Just deposit or margin into 100. Example, you want to buy a car for 100,000 Rand, and the margin on that car is 10%, which is 10,000 Rand. You pay over 10 grand, and then you owe 90 grand. So you pay interest on that. We call that the swap fees charged on a daily basis. It's not much as long as you're aware of it. Okay, so the exposure is 100 grand for the car. The margin is 10,000, it's 10%, which is 10,000 Rand. So if you divide 10 into 100, you get a leverage of 10 to 1. Okay, that's the problem with people understand is they want high leverage accounts. They've got limited amounts of money, so it means they can go and start trading maybe bigger lot sizes, etc. The trouble with that is if they're going big on the 500 to 1 leverage, what will happen then? It doesn't have to be underlying, doesn't have to move much before your margin call. I'm going to give you an idea what a 500 to 1 means. It means you divide the car, make it a house price. You want to buy a house for 1 million Rand, 500 to 1 leverage means you divide 1 million by 500 gives you 2,000 Rand. So you can now buy a house for 2 grand, as long as you can afford the bond. So you happily say, oh, yes, I'm going to do that. I've got 2 grand, and you move to the house. The problem is the house price, percentage-wise, just moves slightly down your margin called, if you see what I mean. So that's the pros and cons of leverage. It's not an excuse to get a higher leverage account because you haven't got much money. Rather put more money in rather than try and increase the leverage because you're asking for margin calling. I know most people understand that, so what they do is they go in. I've seen guys find one going on the Nasdaq with 2, never mind 1, 2, open up as 3, bang, they're out. Margin call or wiped. Yep. So just understand it's like driving a fast car. Nothing wrong. The Lambo can do 250 k's an hour, but in the wrong hands, it's dangerous because you don't understand the danger of it. So then you blame a bloody car, you blame the Lambo, etc. No, you were driving faster than you could afford. There's no way around it, guys. If you don't have the capital, you're always going to be sucking behind you know what. It's just the pros and cons of capitalism. That's a problem. This is not a thing that, oh, I haven't got much money, I'm going to turn it to, see what happens, turn to gold. Unfortunately, normally the opposite happens. You do need the capital. Maintain the positions, diversify, etc. It's very limited. I mean, Zeph turns around, I don't know which accountants I'm going to be discussing allowed to anyway, often talks about 300 pip stop, 500 pip TP or whatever. That's fine. He's got the account, can handle that. But guys in a couple of grand their account can't, so they've got to do the tighter stops. They just don't have the account to go into bigger positions, because even if you put the stop 200 pips away, you'll be margin call well before that, because you don't have enough free margin to make sure that trade's open. Remember, the marginal deposit, collateral for the market maker or bank lending you the money. Once that collateral disappears, then the market maker's under risk. They're not taking a risk, you are. You're the ones taking the risk. They're just getting the percentage interest. So as soon as that's taken away, they will foreclose on you. Same principle. Otherwise, say, don't give me a deposit, drive the car out. Well, there's no collateral in case you can't pay it. Simple as that. Well, I think simple as that. I'm used to it, but I hope you got the sort of concept. And unfortunately, I'm glad you asked that. Unfortunately, I tell you what, I would say a large percentage, way over 50%, do not understand the pros and cons of leverage trading. In fact, I'm sure they don't even think they realize, and they're not in investments in high risk speculation. I'll give an example. Pension funds use this only for hedging. They're not allowed to use it for speculation because of the risk involved. And when I say hedging, I mean they'll take an opposite short position on their particular equity balance. If they think the equity's gone up too much, and they think they don't want to get rid of the equity because selling a large amount will depress the share price anyway. So what they do is they take an equal opposite short position. Hedging means if it does come off, they're quite right, they make money back on the short. If it continues up, they're losing the short position, they made it back on the increase in their equity. So they've hedged it for the purpose of safety on the pension funds and endowment funds, etc. That's the primary purpose of derivative trading. It's for hedging purposes, but you need two sides of the coin. That's where the speculator comes in. It's important you know that. If you don't, you're driving a fast car and you know what speed you're doing, you wonder why when a crash comes, it hurts. Got to understand that. That's why I say, I'll give you an example. Let's have a look at the Euro USD. Generally, I'll just use that for example. Go to their specification. It says contract size 100,000. So that's the exposure. That's the price of the car, the house. And that means 1.0. Contract size always refers to 1.0. So if you go with 1.0 euro dollar, your exposure is 100,000 euros. That's your exposure. Get that to rands, you're talking in the region about what, 1.7 million rand, 1.0. Right, you got a 5 to 1, you can put a small amount down and you can get in. So you got a 20 grand account, small leverage, high leverage, small deposit, in you go, 1.0. The problem you've forgotten, your exposure is 1.7 million. A tiny movement on the exposure can be pretty hectic for yourself, up or down. Well, you got more bloody, I'm allowed to say balls on here than I have there, Petra. Anyone agree with the buy? For the record, I do not. My strong advice suggests at the moment, leave it alone. LIA. But that's me. What do you think, Zeph, or anybody out there? Do you see a buy there? She's a lovely lady. Come on, guys, give us some support. Oh, GPY, maybe JPY. I thought GBP. Beg your pardon. I do beg your pardon. Leave it alone, Ken, absolutely. All right, no, I see the buy. That's a different story. Beg your pardon. Well done. Someone's got brains around here. Thanks, Mark. That's what you mean. Yeah, I see upside. I'm not entering it now. It's too high. I want to buy a bullback. It might go up further. If you're in, I'd hold it. If I was long on this one now, I see 150 down the line, but it's going to be some ups and downs before it gets there. I would buy this for sure, but I want to buy it near the 145 mark for 145.50, somewhere around about that level. 145 is something like that. I wouldn't be chasing it now. Especially with CPI coming out 230, it might take off, then it might, if it comes back a bit, I'll be buying it. Okay, check it. I presume your economic calendar. I've posted just now on the chat line there. It's coming up as 2 monthly, quarterly, and yearly, and the jobless claims, the weekly jobless claims, up as 2. Well, you might get lucky. If you're a lucky guy, go for it. If you're an unlucky guy, go the opposite. Be a contrarian. Okay, guys, any other questions? Because I don't think there are any more trades out. So maybe just spend a little bit of time asking stuff like we just asked about leverage. Hope you understand the basics of it, the pros and cons. Wonderful if you understand it, like a fast car. Wonderful if you understand it. Dangerous if you don't. And I do feel a lot of guys are being brought into this without understanding fully the risks involved. And remember, you can't have one without the other. I want to make a lot of money. I won't take any risk. The two are not. It's mutually exclusive. You have to. One doesn't go without the other. That's why the banks don't need to do that. Why take a risk? Let's wave a magic wand. You've all got 50 million rand. Let's hope. Then you don't need to take a risk. The bank can happily live very, very well off the interest. If you'd have 50,000 rand, you can't retire on it. The interest is not enough. So you've got to take a risk to build it to 50 million rand. That's where this comes in. Unfortunately, go with that does take knowledge and basically discipline and patience, which I can certainly work on. Okay, Mark, I think it's a very good chance to hit the 10.5. That's my line in the sand. What I mean by that, it's a Fibonacci retracement of 618 there since COVID. There we are. Going back to January 2020, practically 3 years ago. There we are. About 10.5 there. That's my line in the sand for the short. From there, I expected a decent sized bounce. I will be buying it there. But I look at the time. Don't forget, I'm saying that now, but the situation is really disastrous. Worldwide economics, then it could go through that. But unless there's any major change, something radical comes on the economic calendar, I think it's going to get there, and then I think it's going to bounce. I think a lot of buyers will come and attract a lot of buyers at that level. There's a lot of option calls will be triggered there as well. Okay. Everyone must know the Fibonacci, very important. Without doubt, support resistance is by far, 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 far the most important on a technical analysis basis, but Fibonacci is also very important. If you don't know any indicators, but you know support resistance, you've got the 200 and the 50 moving averages, and you understand economic fundamentals, you've got that. And the Fibonacci and the support resistance, like I said, you can probably do without the rest. They're useful cherries on the top, but those are the basics. That's the foundations, if you like. Let's come over a few years of practice, looking at trying out new stuff, back testing different moving averages, etc. As you know, guys, I mean, the trades we've had out since I've been doing this in the trading room, I think it's probably, I think it's about 7. I should keep more of a journal. I should do it. I tell you else to do it. I don't do it myself. But looking back, it's overall, I do know in August, it's about 88 to over 80% winners. So that's pretty good. At the moment, it's sometime about 65, I think, something like that. So as long as you 2 out of 3 are right, you're okay. As long as you don't take profit 10 rand on your 2 winners and lose 30 rand on your 1 loser, that's the only problem. But that apart, I do know for a fact that winning trades, I've had overall plus 70%. Not exactly, I think it's a bit higher actually, but I don't want to shout too loud. We all do. We don't like losing. Always bloody whinge like a bloody stuck pig, you know what I mean? We do get it wrong, but then hey, certainly get more right. That's why I'm still in business. I'm still in the game. All right, where do you put the fib? That's your choice. You can do longer term, shorter term. Let's put on the daily. Zoom in a bit. You can choose. You can do a fib. Here's a shorter term fib. You do from there to there. Okay. Let's make it a little bit further across. That's a shorter term. So if you're looking for a shorter term fib, within reason, don't put an hourly one. That's too short. You can use 4 hourly if you like, but below that, it's just not worth it. Let's do a 4 on there, see? And then you can do it. So you came down here, broke through, and then it held around this fib here, and then we had the bounce. Get the idea? You can even put a fib if you want to this low here. Let's do a shorter term one. Maybe do a shorter term one there and bring it down here. So you choose whether you're shorter term or longer term. Longer term, to be honest, is slightly more accurate, in fact, a lot more accurate, but you can use a shorter term. You might have heard the term fib fishing, where you put a fib on there and a fib on another one, and let's say the 618 interacts with the 38.2 on the shorter and longer term fib. We call that fib fishing. If they're exactly the same, coincide is probably the better word. That's an even more powerful technical way to buy or sell, depending which way you're going. Okay. Make sense? If not, we'll give another example. Now, on some instruction here. Yeah, we've got to make sure you don't use the candle that's still a work in progress. You won't get one here because if you try this, it'll be broken through. So yeah, so try something else. Maybe leave the Nasdaq alone. Maybe you can use gas. I've got to trade out on that one. Look how slow it is. At least in profit. Yeah, we can't really get a fib on there. It's a short-term fib. You can even look at the short. It's a bit short-term for my liking. You do that. Seem to be holding around that area there. But it's nice to have a longer-term one. So you can find out going back in time. Let's try this one to here. See how it works. Well, didn't exactly work there, did it? Let's try longer terms here. See how that works. Did it bounce? No, it didn't. Did it bounce? No, it didn't. Start to bounce here, then came down, bounced there. You might have got in there and you taken a bit of profit. Came back down, bounced, went up again. 618. Did it bounce? No. So sometimes it doesn't work. Glad to show you that. It doesn't always work, but it's a useful tool. Remember, the price action, a lot of interferences on it. That's why sometimes robots can let you down. There's some of them very good, in fact. It's because they don't understand economic fundamentals. It's a robot, and things can interfere with the fundamental side. But I do like the moving averages. Look how that seems to be holding. See what I mean? Okay. So yeah, okay, Zeph, I prefer the slightly longer term. I don't need the yearly one, but I mean slightly longer term. I find often it's a bit more effective. If you take a very, very short term, it's often ignored. No, it's basically psychological like most things, Kathy. It's invented about 800-900 years ago. I forget his name now. It's called the what you call it, the arithmetic or the maths of the universe. We get 1 + 2 is 3, then divide it by 2, and then 3 + 2 is 5, and then 5 + 3 is 8, etc. and divide it up. A lot of it's psychological because it's used. I mean, if you see a fib there and you see it bouncing and you got, not on its own, remember, not on its own, and you got a bit of a strong support or a couple of lows there, and maybe even coming into the 50 or 200-day moving average at a 618 fib. You're not the only one seeing that. Other guys are going to see that. Not the total amateurs. I mean, people who've been training for a while see it. So they say, that's a good idea. I'm going to buy now and I'm going to close my short position. You close your short position, you've got to buy to exit. That will put momentum on the upside. Then you're going to add the momentum by buying yourself. Other guys will see it. So it becomes basically self-fulfilling. And you can do it both ways. You can expect downside. You can sort of start from the top. If you expect this to go, well, up, then you try this one here. So you should get the right way around. Maybe put a fib the other way around, take the stop up. Expecting downside, expecting downside end gas, gets the 618 fib, look how it comes off. I like it when you ask these questions, we do it live, because then you can see how it sometimes doesn't work. Unfortunately, you go to YouTube and they will use the past to show how brilliant it works. But they particularly chose that chart in retrospect. I just pulled that out of the blue there, as you can see. It's more impact because it's my opinion, but it's honest. You get the idea. Okay. Happy on the fib? Bit of practice will be a bit clearer. Play around with it. Okay. Trend lines, very, very popular. As I mentioned before, I am a little bit wary of them, simply because people put trend lines in different places. As I say, some put in the right place using the body, and some put in the right place using the wick. And they're both equally knowledgeable and equally say, no, use the wick, not the body. And I'll say, no, the body, not the wick. Other people just put in the wrong place and they react to that misinformation. And unfortunately, it doesn't work. So trend lines, they're good, but I'm a little bit skeptical of them. Support resistance, because it's so obvious, those highs, yes. 250-day, it's in your face, yes. The fib, put in the right position, like I've shown you, yes. Trend lines, I'm a little bit wary of for that reason. CPI, yeah, it's coming in at 2:30, yeah. What about it? Yes, correct. You divide by 10, you're spot on. I had a guy call up Tebo the other day and says, your spreads are ridiculous, 35 pips. So I had to explain, it's not 35 pips, it's 35 points, which is 3.5 pips. So when I do this, for instance, and I want to see the distance from there to there, I put my cursor on it, hold the left click down, hold and drag it up. That says 1371 points. I'm not after points, I'm after pips. That says 137. Probably easier on, let's say, NZD USD. What might be coming off? Let's see, I want to do this here, and I see how far it is up to there. I can see it's 2061 points. I'm not after points, I'm after pips. So I immediately knock off the last decimal point and say 206. So that's 206 pips. Okay. Right. So next question asked, well, why do we have points in the first place? Worldwide, there's some very, very big players in the market, so the point counts. Fortunately, here we don't have those big players, so ignore it's irrelevant. For instance, like 1 basis point movement is a factor to take into consideration if you've got 100 million rand, but if you've got 50,000 rand, it's irrelevant. And this is an international platform used elsewhere. Remember, there's guys using this platform, individuals who've got balances higher than entire quick trade overseas here, entire book. to get an idea of the size we're talking overseas. So it worries me a little bit when guys come in here because they're not traveled, they're not unworldly, don't realise that the amounts of money they're playing with are so tiny. They're competing with guys who've got serious bucks. Fortunately, that's the problem. Money's power. Simple as that. Okay. All good, Tebo? Good. Any other questions, guys? Happy, Isabel? Clear? All good, Petro? Mike? Everybody? Anything you're not sure about? Well, a lot of things, but any other questions? You want clarity on? Okay, good stuff, Petro. Where the bottom is, how far more is going to come down before they step and increase production? If it comes down in the early 80s, I think it'll start stepping on by decreasing, start closing the taps, better way of putting it. As I said before, Mark, it's a bit of a fight between producer and the buyer, if you like, consumer, producer and consumer. Remember, oil affects everything. We make plastic from it, we drive our cars by it, transport of foodstuffs affects everything. And the high oil price is a short-term look from the producer's point of view, because it's no good to them crippling the world economy, then who's going to buy their products, you know? Yeah, well, there you are then. It's a fight between the two. I think a lot of it's saber rattling. The trouble with Saudi, it's a kingdom, it's not a democracy, number one, and the kingdom, basically, and the oil and the money to that state is meaningless. It's completely, utterly meaningless when you get those kind of amounts. And as I say, there's no democracy, they do their thing. And quite frankly, the cost of getting out of the ground is the cheapest. It costs a lot to get out of the ground in the WTI, Western Texas Intermediate in America. It costs a sodding fortune to get Brent, which is North Sea oil. They've got these phenomenally expensive rigs. They've got expensive people to put on board. They've got to feed them, safety, pay them. They do 2 weeks on, 2 weeks off on full pay. The running of the rigs to drill down there. Often the conditions and weather is bad. So it's, you know, it's expensive to get out the ground. That Saudi isn't. So it's different. Oh, they have increased it. I've been there actually, and it's radically increased their infrastructure anyway. But still, it's like the Sultan of Borneo. It's his oil. Spends it as he likes. No, I think it's done its spiking. I think it's going to graduate down. Well, remember they can produce. Who's speaking there? Yeah, I still. Oh, Mark. Yeah, remember you can. I mean, remember I mentioned, you know, that the Keystone Pipeline in America was cut off by Biden because the Green Party, which are a big backers of the Democratic Party, remember it's all about cutting a deal with big money. That's why they're coming for. We've got money. It wouldn't be very important otherwise. Put a lot of pressure to say, right, cut it off. We'll back you with your campaign, and then you put it door, which you didn't do. Now, of course, everyone's kicking up because the cost of living is skyrocketing. So there's a lot of pressure to open up again. So they can produce more. Yeah, we all do that stuff. That's all very fine and great. Back to Maslow's needs, all very well saying that. But if your life's on the line, stop the Indian territory. Maybe it's people who are comfortably off, nice, comfortably off people worry about things like that, like save the rhino. When you're starving, your next meal's coming from, you don't really give a continental about saving the rhino. Simple as that. Back channel lobbyists, exactly it. Exactly it, John. I'll give you a good example about the transgender situation. Simply, it's a few people with a large amount of money, which means power, making such a song and dance about it. But it's a tiny, microscopic amount of people, the population are transgenders. It's way out of link with that kind of power. Lobbyists, quite right. Special interest groups and big backing. We're all hypocritical. I'll tell you exactly what the minority right's all about. They get their votes from them. So that's the currency at that level. Sure. No, you're not, but it's, yeah. What can I say? I mean, said before, absolutely. It's just, yeah. About power, my friend, about power. In democracy, it's a sales pitch. The King of Saudi Arabia, you do as I very well tell you, or China will come to it. In democracy, it's virtually still a dictatorship. The difference is they have to spend a lot of money on a sales pitch. So you think and do what I very will tell you to think and do. Sorry to be cynical, but that's what I see. That's why you see often these TV news programs. They don't really tend to very large issues. They tend to concentrate on the smaller ones. They sidetrack the bigger ones. It's all about marketing. Yeah. Okay, right. Anyway, sidetrack. We haven't really got any more trades to come out with. We're going to wait for the CPI. I hope we're going to get some action later on today when we open up at 4 o'clock. So keep an eye on Harper's 2, CPI, jobless claims, opening, and catch you at 4 o'clock. And hopefully you're going to get some decent action going into the weekend for tomorrow. Okay. Right. Thanks for sticking around, guys. And yeah, not much more I can add on it. Thanks for the guys. I hope I clarified a few things on the learning process as well. And if you're not sure, write it down, bring a pen and paper, and how it's chart to set up or anything like that, and we can discuss it later on this afternoon. Okay, thanks, guys. Thanks, Werner. Thanks, Barney. Thanks, guys. Cheers, Philip.